In this video, I will explain everything you need to know about getting a small business loan in Nigeria. It's essential information whether you're looking to expand your business, start a new venture, or simply need capital to keep things going. Small business loans can provide the necessary funds to grow your business, purchase equipment, or bring in more staff. Understanding all available options and how to navigate the process is crucial for success. Let me walk you through everything step by step so you can make informed decisions about financing your business. Let's explore the different types of small business loans available in Nigeria. The best loan for your business depends on your specific needs and each lender's requirement. First on our list are bank loans offered by institutions like GT Bank, Access Bank, and Zenith Bank, to mention a few, which typically come with lower interest rates. These traditional loans require a good credit history, detailed financial statements, and collateral to qualify. Bank loans are ideal for established businesses with proper documentation, especially when seeking large amounts of capital. Keep in mind that banks generally have stricter approval processes compared to other lending options. Next on our list are microfinance loans provided by institutions such as LAPO, Ision, and Asset Microfinance Bank that offer smaller loans to entrepreneurs. These loans are more accessible than bank loans, particularly for those who don't qualify for traditional banking services. The downside of microfinance loans, though, is that they tend to have higher interest rates, sometimes reaching up to 40%, but they can provide much needed capital for small businesses that have limited options. Another option to consider are government loans and grants through institutions like the Bank of Industry and Nassau Microfinance Bank, which support small businesses with favorable terms. These loans often feature lower interest rates and better repayment conditions, which we are going to discuss in more detail later in this video. Finally, we have fintech loans from platforms like Branch, Rain Money, and Carbon, offering quick loans with minimal paperwork. These loans are typically available through mobile apps with approval processes that can take just a few hours. The convenience of fintech loans often come at a higher cost, with interest rates ranging from 3% to 10% per month. This makes them a more expensive long-term option, so it's important to weigh convenience against cost when considering these loans. Before applying for any loan, you need to ensure that you meet the basic qualifications. Most small business loans in Nigeria require that your business is properly registered with the Corporate Affairs Commission to prove legitimacy and proper structure. Lenders will also review your credit history to determine whether you are likely to repay the loan on time. A positive repayment history improves your chances, while no credit history might make bank loans difficult to obtain, but microfinance or fintech loans may still be accessible. A solid business plan is essential for loan approval, as it outlines how you plan to use the funds and your repayment strategy. Many lenders, especially banks, require collateral such as property or equipment that they can claim if you default on the loan. Meeting these criteria increases your approval chances and streamlines the application process significantly. Let's talk about the loan application process, which becomes straightforward once you meet the eligibility requirements. The first step is gathering all necessary documents, including your CAC registration, business plan, bank statements, and tax records. Next, you need to choose the right lender based on whether you prefer a bank, microfinance institution, or fintech platform, keeping in mind that each has slightly different processes, with fintech generally being the fastest option. After selecting a lender, submit your complete application either online or offline, ensuring that all information is accurate to avoid unnecessary delays. Along with your application, you must submit all required supporting documents, as missing paperwork is one of the most common reasons for delays or rejections. Finally, you will need to wait for approval, which varies by lender, with fintech platforms like Rain Money potentially approving loans within 24 hours, while banks might take several weeks to process your application. Understanding interest rates and fees is crucial before taking out any loan. The cost of borrowing varies significantly depending on the lender you choose. Traditional bank loans typically have interest rates ranging from 15% to 30% based on your business credit profile and loan amount. While banks offer lower interest rates, they also enforce stricter requirements for borrowers. Microfinance loans can have interest rates as high as 40%, which reflects the higher risk these institutions take when lending to smaller businesses. These loans provide vital funding for businesses that don't qualify for bank loans, but the higher rates must be considered in your financial planning. Digital lenders such as Branch and Carbon typically charge interest rates between 3% and 10% per month. While these fintech loans offer quick and convenient funding, they can become expensive over time if not managed properly. Always be aware of additional costs like processing fees, insurance premiums, and late repayment penalties that may apply to your loan. Always read the fine print thoroughly to understand the total cost of borrowing before making a commitment. The Nigerian government provides several support schemes for small business owners with loans that typically offer lower interest rates and flexible terms. Nassau Microfinance Bank offers the Targeted Credit Facility, which was introduced to help businesses affected by the COVID-19 pandemic. The maximum available loan through this program is 25 million naira with an interest rate of just 9% per annum, making it significantly more affordable than traditional loan options. The Agribusiness Small and Medium Enterprise Investment Scheme supports agricultural businesses with loans up to 10 million naira at competitive interest rates. The repayment terms are designed to be flexible, adapting to specific business needs and cash flow patterns. The Bank of Industry offers medium to long-term loans with interest rates as low as 7% per annum. These loans target businesses in sectors like manufacturing, food processing, and textiles to promote industrial growth and economic development. The Central Bank of Nigeria manages several intervention funds focusing on sectors such as agriculture and healthcare. Programs like the Anchor Borrowers Program support smallholder farmers, while the Real Support Sector Facility helps manufacturers increase production capacity through affordable financing. If traditional loans don't suit your business needs, consider these alternative financing options that might be a better fit. Crowdfunding platforms such as Niger Fund and GoFundMe allow you to raise funds from the general public by presenting your business idea online. A compelling and innovative product or service can help secure financing from a wide audience, but success requires a strong pitch and effective marketing strategy to attract potential backers. There are also venture capital firms that invest in businesses with high growth potential in exchange for equity stakes. Well-known VC firms like TLCom Capital and Echo VC Partners actively support Nigerian startups, particularly in technology and innovation sectors. This financing option works well for businesses seeking large-scale investment with a clear path to profitability. But remember that venture capital typically means sacrificing some control of your business. Another alternative could be angel investors. These are individuals who provide startup capital, usually in exchange for equity or convertible debt arrangements. Unlike venture capitalists, angel investors often focus on smaller, early-stage businesses with growth potential. Organizations like the Lagos Angel Network connect entrepreneurs with potential investors in Nigeria. Applying for a loan can be complex, and certain mistakes could lead to delays or rejection of your application. One of the most common reasons for loan rejection is what I mentioned earlier, which is submitting incomplete applications with missing information. Always double-check your application and ensure that all paperwork is included before submission to avoid unnecessary delays. Not understanding loan terms is another critical mistake to avoid when seeking financing. Before signing any agreement, carefully read all terms and make sure that you understand the interest rates, repayment schedules, and additional fees. Never hesitate to ask the lender for clarification if something seems unclear or confusing. While it may be tempting to borrow more money than necessary, doing so could lead to financial strain on your business. Only borrow what you absolutely need and ensure that you have a realistic plan to repay the loan to maintain financial stability. Failing to develop a repayment plan before receiving the loan is a serious oversight that can lead to problems later. Create a clear strategy for repayment based on your business's projected cash flow and growth expectations. Proper financial planning is essential to avoid repayment challenges and maintain a good credit standing. Securing a small business loan in Nigeria can provide the capital needed to grow your business, purchase equipment, or manage cash flow effectively. Taking time to consider all available options, understanding eligibility requirements, and avoiding common application mistakes will improve your chances of success. Don't overlook government-backed schemes such as loans from Nassau Microfinance Bank or Bank of Industry, which often provide more favorable terms and lower interest rates than commercial options. Also, never hesitate to seek professional advice if you are uncertain about any aspect of the loan process or which option best suits your specific needs. I hope this guide provides valuable information to help you take your business to new heights of success. I wish you the best of luck in securing the perfect financing solution for your business. So please don't forget to like this video, make sure you are subscribed, and I will see you in the next video. Bye for now.